Hi, my name is Mark Walker and I'm the editorial director at the FinTech Times. We're here at Seamless Middle East in Dubai and we're here with Seamless TV. I'm going to start off by asking my interviewee to introduce himself to the audience.
Thank you very much, Mark. Great to be here with FinTech Times and Seamless TV. I'm Alexandru Badulescu. I had the chance over the past 20 years or so to be working in payments in Europe, Middle East and Africa, running global digital payments as well for a company called Western Union. I was also in some fintech groups. I had the chance to interact with banks, fintech players, digital wallets. So I have a little bit of a flavor of both payments and fintech. And right now I'm an advisor in the region, working with startups and investors, as well as some of the established players on the digital transformation journey.
Okay, fantastic. Thank you very much for that. I guess that would mean you are perfectly placed to tell us what are the key trends that we're seeing in the region at the moment compared to the global trends.
The first message that I would have is that I'm generally positive and optimistic about fintech.
Okay.
And if you just kind of take a little bit of a step back and look globally at the industry, there are different reports out there. But there's about 12.5 trillion in revenue overall in financial services. Fintech is only taking a 2% share of that. So it's still very, very small. And it's projected to grow by 5-6 times until 2030. So there's a huge avenue for growth. Again, then you look at financial services, very profitable area, 18-20% margins, low level of service in general, still by banks. You look at the NPS out there, significantly lower than payments. So there's a good opportunity to improve on many aspects of that, whether this is savings, payments, sending money, lending as well. So there's a lot of space for that to get better. Some people may be a little bit, let's say, disappointed by the current context, but there's a market adjustment. So investments are not flowing as well as before. It's 50% down, and that's largely due to some of the larger deals globally. But there is still space for growth, and there's more of an adjustment. If you look at the multiples for different companies out there, they are at similar levels to maybe just a few years ago. So there's been a little bit of an increase, and it's coming down. So nothing unusual. So if you take a little bit of a long-term view, there's every reason to be optimistic about this industry.
Okay,
so,
I think it's kind of an interesting one to just comment on that point. Do you see a difference in the reduction of investment from sort of the US and European markets compared to the MENA region, the Middle East, North Africa? Is it down here as well, or is it slightly bucking that trend?
Well, it would be more of an opinion here, so rather than statistics based on the interactions with different people. So there is a little bit of a wait and see and adjustments of the appetite and attitude of investors towards companies. Things going back to profitability, going back to unit economics, making sure you have a healthy product rather than just valuation. So attitude is not very different, I would say, and you still see investments in the different parts of the world. It's probably still a little bit more flowing in the region, places like Saudi, but I wouldn't say it's significantly different. But there are always good deals. There are always good deals out there, and things are happening.
Yeah, I think it's one of those things where there's a lot of talk in Europe at the moment of dry powder, with VCs saying they've just got a little bit nervous because of things that have happened, and they're thinking, well, let's just take a little bit more time and think a little bit more about it. So as you say, perhaps nothing to be too worried about, because as you say, it's a long road. I
always like to take the long view. If you take the longer term, 5 or 10 years, things are always going in cycles. So at some point, it's gonna get better. People are also focused on what are we gonna do now, and it's about profitability, managing things in the right way. Just getting back to your question about the trends. So what is growing and what is exciting? You can take a little bit of the view of what are the pressure points in the industry or what's happening, what are the pain points. So for example, regulation is still on the up. So the RegTech area, digital identity, onboarding, compliance as a service, this is an area which is growing. Cybersecurity and fraud threats, real-time risk assessment. So these are things that are getting interesting. The collaboration between incumbents, established players like the banks, the larger companies and fintech is also on the rise. So you see corporate VC, for example, is increasing. And as an example, here in the region, the DIFC has just set up under the Innovation Hub something called the Launch Pad, which is a model for venture studios, where banks or established companies can come up and build and start new ventures. Similar things are happening in Abu Dhabi and also in Saudi Arabia. So that's also something a little bit on the rise. And the third, if I am to pick a third one, the third element is SME finance. This is a significantly underserved area, and I see you start seeing a lot of new models trying to address that, both in the region and also globally. How better to support funding for SMEs. Again, you take some global numbers, 400 million, it sounds like an SME, sounds like a huge number. About $5 trillion unmet needs. This is significantly underserved by the banks. And then you look here in the region, less than 5% of the lending that banks do goes to SMEs. So it's still, there's a massive area. So collecting data, analyzing it, and finding ways to credit score better and fund SMEs is also an area of growth, and investors are excited about it.
Yeah, and I think that's a really interesting area, as you say, sort of SME business, both lending but other services to SMEs. It feels like very much when fintech was launched, they went for the shiny bits, which is the consumer side of things.
Yes.
Very much looking at consumer digital bank accounts.
Yes.
But then everyone's very quickly seems to, especially in Europe, starting addressing then the business side of things, because it's kind of the next main step, I guess. The banks themselves also just don't have the capacity to lend into that space. So that's the thing that's given rise effectively to this trend.
Yes, it's capacity on one side. It's also there's a little bit of a risk aversion. They may not have all of the tools or the resources to understand the risk. It's getting expensive. So just running through regular financial reports is not enough to assess the risk of funding an SME. So this is where again a fintech, which can digitize all of this piece from origination to lending, can make a difference, and that's very much true. And it's correct what you're saying. So if you look at the past several years, 5-10 years, a lot of it has been about payments and the consumer side of things. Paying, transferring, cross-border payments are still broken. It's improving. There are a number of providers out there that are building the infrastructure. So now things are moving up. So you can say payments is moving into either payments plus or payments 2.0. So things are getting, and I'm happy to talk a little bit about this, diversified, both on the provider side and on the companies who are serving consumers.
Yeah.
And then the next thing could be B2B finance, the next big thing in fintech. Obviously, there are other areas as well, but
I think, like you say, with the sort of the natural progression of payments is then thinking about, from a business point of view, is then obviously you have payments that you receive and you have payments that you send out to your suppliers. Yes. So balancing those two, which is the age-old problem of business. How can I have to spend out money before I can get money in?
Yes.
And how can I then flatten that line? So as you say, lots of people looking, definitely in Europe, in that sort of cash flow funding area.
Yes.
Are you seeing that trend here in the region?
A little bit, yes. So a little bit of a trade finance or invoice financing. It's still relatively timid, but the timing is right, because you start seeing a lot better digitizing of invoicing, for example. Saudi Arabia just launched it. I was on a panel yesterday and we talked a little bit about that. So you start having much more transparency. You understand where an SME makes payments and what are the payments that they make, so you can predict their cash flow better, and then also understand the risk around funding them. There are a few companies as well that have been doing this. Beehive, for example, here in the UAE, and a number of other players. So it's coming to the region. I think the timing is right at the moment.
It was very interesting, Beehive, that you mentioned Beehive. I think they were the first fintech to move into the IFC when I did an interview recently. Okay. So I think that was the first company that they started with way back when they first decided that fintech was going to be a thing, which was very interesting.
Yeah, and I was talking yesterday to Peter, and he was saying it took about 9 years. So not 2 years, not 3 years, 9 years. So really building things and getting it to the right level, but it works.
I think people underestimate how long it takes. We think that we are in a very fast-paced, fast-moving environment.
Yes.
But it still takes a long time to actually get long-term adoption.
Yes.
And I guess that's just similar here in the region as it is anywhere.
Yes. Everyone talks about disruption, right? Disruption is not, and you would expect this happens over time. But all of these new trends, all of these new technologies, they can take sometimes even decades to get established. For example, real-time payments or instant payments is really big globally in terms of cross-border. And only now you start seeing, for example, digital wallets, both in e-commerce and at point of sale. They take a bigger share of the payments than cards do overall. And I include all kinds of wallets, payment wallets like Apple Pay, Google Pay, and so forth. Digital wallets here in the region, something like an STC Pay or an M-Pesa, including everything. In the Chinese ones and so forth. So now it's already larger than cards, but it took some time to get there.
Yeah, and it's interesting. There's we talk a lot about leapfrog economies,
right?
Leapfrog markets, where, for example, in the UK we very much went through, the card swiping system.
Yes.
Then we went to credit cards.
Yes.
Then we started doing contactless. Then we started mobile wallets. Then we started mobile payments. In the Middle East, they seem to have jumped over a couple.
Absolutely,
which is kind of handy.
I have a personal example there, right?
Okay.
When you go and pay your rent here, they still ask you for a check. And I'm saying, I have no checks. I don't know how it works. I can pay you with my bank account. And then I explain how it works. And then they see it instantly hits their account, and they're happy with that. There's no card in that case, so there's a bank payment, which is nearly instant. It took a few minutes to get there. So you're absolutely right. Absolutely right. There's an opportunity to build things from scratch, and there's a lot of investment going there. So really getting a much better experience. Whereas in Europe or the United States, it's still difficult to replace kind of the legacy solutions and
it's very much hampered by the original infrastructure because it's so ingrained into society and way to do it. Someone said to me the other day that we're still waiting for the US to catch up when it comes to payments. Faster payments, FedNow, if you're familiar with, obviously just started being released. A few teething troubles when it first came out, but that's amazing to think of it from a European perspective. We've had faster payments now for many, many years.
Yes.
We're now all used to, you send it, it arrives.
Yes.
And to think that the US has never had that is almost unable to compute it in a way.
And not only in Europe, if you think about it, there are now over 60 countries that have instant payments domestic infrastructures. So locally, you can pay instantly in over 60 countries. And it's counting. Every year you see more of that. So that's why also in cross-border payments, you see providers that build this infrastructure that link this broken system directly. They go directly into the domestic payment system, or they go directly to local bank accounts, and so they are able to make it faster, reduce cost, and sometimes even friction, because they are able to connecting to the local infrastructure. They are able to better validate an account, get less rejections or less friction for the consumer. So all of that is improving. This is what we've seen for the past several years. If you look at where things are moving, they are getting a bit more complex out there. So consumers like to pay what is available in their country, whether this is a digital wallet, maybe it's a their bank account. Or something else. So there are hundreds and hundreds of alternative payment methods. So things are getting a little bit more complicated, which requires not just infrastructure but also to orchestrate this kind of payments.
Yeah.
And then you have the cyber security, you have the compliance and the risk. So what you see, some of the payment providers are moving upstream on the value chain and also a little bit laterally, starting to offer other services from invoicing. Revenue recognition, tax automation. Tax is also coming a little bit here in the region, like VAT and a little bit of corporate tax. So that's also going to be required. Real-time risk assessment. So providing a range of services to their clients, also to e-commerce. This is where payment providers are moving. And then when you look at, we're talking about consumer payments before. things used to be a little bit specialized in the past. I have a little bit of background also in remittance, and companies there were very specialized in targeting consumers and offering them a very good service. Right now, they're also opening their portfolio of products. So they try to almost open an account for consumer, make it more convenient for them, and offer other services. For example, Wise is offering a card and an account, right, in Europe and not only. You even see some of the established players, like here in the region, Alexandru Exchange did an IPO, which is the largest exchange in the UAE. They are also going for a payments ecosystem and digitizing their payments and opening it up from very simple targeted services to more. So probably these are the two things that are happening in payments, I would say, if I'm to oversimplify.
Yeah, absolutely. I think it's kind of like the way that we phrase in Europe is the rise of the super app. So you think of Kareem here. Kareem, you pretty much do everything you want to do on there. You order your medication, you order your food, you order your car, you order everything. And you have Kareem Pay as well. So, you know, they're kind of making forays into that. I guess the question is kind of like, it obviously needs to explode before it comes back in. Are we in that consolidation phase now, do you think? Where we're seeing more and more payment offerings will start working together or will buy each other out? What's your thoughts on that?
I think there is still room for new players. I mean, in certain areas, things are probably getting a little bit consolidated because it's getting competitive and margins are coming under pressure. So that's kind of one aspect. But in value-added services, there is still space for growth. Or maybe we'll see new providers coming in to do very specific things in the value chain is getting reconfigured, broken down and kind of reconfigured. So someone is specializing in fraud detection or risk management, or as we said before, AML compliance. And maybe over time that's also going to change. They will get acquired. So I think there is both trends are happening. There's a little bit of consolidation where margins are under pressure, but also new services coming on board. And just picking up on what you said around the super apps before, you see a number of super apps being successful around the world, but at the end of the day, this is the ultimate super app. On this screen, you have everything. So I think the jury is still out there.
Yeah.
Probably in certain countries and places, and super apps tend to be very much local because they're relevant to whatever local consumers like.
True.
So I think we'll have to see. I don't believe yet in a global super app.
Okay, very interesting.
Let's see.
I guess, so we talked a bit about sort of current trends and that. What's the future going to hold, specifically maybe with payments? Where do you think the next major innovation or the next major technology change is going to happen in payments?
There are many things, many new emerging technologies over there. There's obviously embedded finance is coming up. Blockchain is also coming in. Internet of Things, different devices being connected to internet. So there's probably going to be a lot of use cases. I don't dare making a prediction which is going to be the biggest one. I think it's very interesting and very excited to be in payments and in fintech right now, because a lot of things will develop. Again, I go back to the idea, many segments are still underserved. You have 1.5 billion people without a bank account around the world, and 2.8 billion underbanked, even here in the region. Hundreds of millions of SME, they don't get funding. So there's a lot of opportunity to grow. And I'd rather believe that things will continue. So coming back to, if I am to pick two things, in payments, probably this kind of payments plus, the evolution of payments, where providers are more orchestrating and adding to the service. And then those who are consumer facing or client facing as well, diversifying their portfolio to retain the customer, make it more convenient, make it faster, make it cheaper and with less friction. And then on the B2B, I'm excited as well about SME funding. I think there's a lot of opportunity there. It's not easy, it's a risky segment, but with digitizing and capturing data and analyzing, risk models can evolve. I think there's a true opportunity there. Those are the two things that I would see going forward.
Well, we're going to have to meet again next year and see if you're all right, I guess.
Looking forward to that.
Thank you very much for joining me on Seamless TV, powered by the FinTech Times.
Thank you very much, Mark. Great to be here.